Today's video is Bounce Day. The benefit of watching the video is you're going to learn how to find low-risk entries on stocks that have been recently selling off and that can have powerful up moves, usually right in the first few minutes of the trading day. And I'll kind of walk you through the process of how I find some of these stocks and how I trade them. And there was a bunch of them today. For those of you who don't know, my name is Steve Spencer. I'm a partner at SMB Capital, proprietary trading firm in New York City. Been trading for over 20 years. Our firm trains new traders how to trade stocks, futures, and options. And the materials that I'm going to go over in today's video, I actually discuss more in depth in a 2-hour free workshop. So feel free to click on the link if you enjoy this video to get much more in-depth instruction on these short-term trading topics. Proper preparation. Proper preparation is actually one of the 7 fundamentals at SMB, which you've probably heard us talk about before for one good trade. Each morning before the market opens, I'm going to identify stocks that I want to trade. And there are 2 types of stocks. One is something with a fresh catalyst, and then the other types of stocks are what we call second day or technical setups. In today's video, we're going to review some of the stocks from the second day and technical setups. Bounce trades in stocks that are short-term oversold are technically they are a technical setup. And what that basically means is when a stock is recently sold off 2, 3, 4 days in a row and come off a significant percentage, they tend to mean revert and have a strong up day. And the stocks that do this generally have a history of doing it. And so one of the ways that we identify these stocks is what are the stocks that have shown a propensity of doing this in the past. And the first place to look usually is what we call market leaders. Stocks that most people are familiar with. When you talk about the market with people, the average person, they've heard about these stocks. And these are the ones that not only do most people, when you talk to them in casual conversation, retail people, know about them, but also momentum hedge funds. And the key to finding the right stocks to play are what are the momentum hedge funds that are piling in and out with hundreds of millions of dollars, if not more. What are the stocks that they're looking at? And so the examples for today fit that category perfectly. It just so happened that today a bunch of them have sold off recently. The other thing that came into play, I would make this play in these types of stocks if they had sold off a few days in a row, regardless of what the market was doing, but it was actually quite helpful that today the market was gapping lower, so we could see, we could judge the relative strength of these stocks, and then also if the market started to bounce, it would add more fuel to the fire. And so that was just kind of a little of a side thing, which you don't necessarily need, but I just wanted to mention it because it happened with these particular stocks today. So do you have a detailed trading plan? The reason this is important is, as you'll see the morning game plan notes, which I'll show you in a minute, is I have what I call S1 and S2, levels that I want to look at to play the balance. S1 is first support, S2 is second support. Depending on exactly how the individual stock sets up, it might be more likely to bounce off of S1 or of S2. So first place I'll look when the market opens is that stock opening above S1? If it is, I'll look for the bounce at S1. If it's opening below S1, then I'll look for it to flush into S2. That's kind of the basic thing. So that's do you have a plan A and do you have a plan B? You need to be able to play it off of either one of these support areas that you've identified. And then if a bunch of them have set up at the same time, what I do is I have contingent orders, which this basically means is I can't watch all of the stocks at once, so I'm going to have orders in there to handle stocks that I might not see when my price alerts go off. And that's the other thing. Do you have price alerts? I always set price alerts at S1. I set price alerts at S2. And that's part of my proper preparation. So let's take a look at these names from today. First of all, here's what I described to you, the second day in technical plays. Number 2 and 3 are what we're going to take a look at, Facebook and BABA. 1 and 4 were actually good setups as well. You can probably, if we post the morning meeting on YouTube, you can check out those stocks as well when I discuss in the morning meeting. Those trades actually worked really well as well. The number one idea bounced off of S1, but there are different types of setups, and that's why we're not going to kind of review them in this video. So Facebook and Bob had just sold off several days in a row, and also another one that I traded, Twitter, TWTR, had also gone down over 10% the last couple of days. So those were the three that I was making technical oversold, short-term oversold bounce plays on. So the first one is BABA. So if you can look at BABA on the 30-minute chart over the last few days, you can see day one it got hammered, day two it got hammered, day three was yesterday, it got hammered again, and the longer term support area I kind of highlighted with that bottom blue line around 160. And it actually had gone through it yesterday. So the great thing about this one was this morning, it already was showing signs in the pre-market of bouncing. It was up at 62, 63. And so, and we knew yesterday's low, which was a little bit below the 160, plus 160 is the long-term support. In this situation, when it's opening above that level, the low from the prior day and the long-term support, I love to buy into that support, into the 160. And so that's kind of exactly how I made that play. One of the things you want to look for is, like, say it flushes into the 160 and you're buying into that, don't buy your full position there initially on the initial flush, buy 25 to 50% of it. And then if it goes through, you can buy at S2, or you can wait till it gets back above S1 and then add to your position there as well. And in this case, it just kind of flushed S1, it started to tick back up, and as I'm doing this video, it had like kind of an opening bounce of $3 or $4. A couple more points I want to make. So if you buy it, you buy your position on the open, and it immediately pops $3 or $4. Generally, the rule of thumb is sell 25 to 50% of the position, which you don't know if it's going to retest the low, you don't know if it's going to consolidate above that top blue line, and then this will be the actual real bottom. But you want to take some sales in there to cover your risk if you do get that $3 or $4 bounce. Generally, I would say between a half of an ATR and a 1 ATR bounce, those are good spots to start to take off some risk, and that way, even if it ends up rolling over and trading through S2 later in the day, you've still, at worst case scenario, broken even or made a little bit of money. So this is, here's the lower time frame chart on it. You can kind of see in the pre-market, I mentioned it had been up a few dollars. It bounced into 160, went straight up. What I want to see is, you can see it took out that pre-market high pretty easily. So there's a better chance that it could bounce later in the day as well. Oh, and then also I have the prior day highlighted there. The first thing I want to say is when I'm buying at 160 is within the first 5 or 10 minutes to get above the prior afternoon's resistance, which it did. That gives you some confidence to kind of hold, to try to capture, close to an ATR on the first 30 minutes or so. So the next example is Facebook. Facebook also was crushed the last few days. You can see it was in the mid 170s, and I actually started to get long this yesterday. Put in a script to buy this on a flush to 160, and it was similar setup to BABA in the sense that it had a little bit of an up move at the end of the day on the prior day, so you had that low to work with. And in the case of Facebook, if you went back a couple of months, it had a really big bounce that started from a couple of dollars below yesterday's low, which was 158. So I was hoping that it would take out yesterday's low, go down to 158. I would put on a significantly larger position and look for a big move right back into the low 160s. So in this case, all it ended up doing was just retesting the prior day's low, where I started buying yesterday, and bouncing from there. So here is the zoomed in chart, the 5-minute chart, and you can kind of see yesterday's low, that wick there, that's where I got hit on the move into 160. And then this morning it was a repeat of the same thing, which was basically flushed into 160. So in this case, again, what I mentioned in the last one, you're going to buy 25 to 50% of your position because you're looking for that flush down to S2. If you don't get it, you're probably not going to be as big unless you get a quick move back above the prior afternoon's resistance, it consolidates, and then it breaks to the upside. That's where a second spot where you can build. But in this trade, generally what you want to see is on the open, hold some sort of key level, 50% a full ATR move, you take off half the position, you cover your risk, and even if you don't get a clean consolidation to add to the position, you still have some of that position in case that's the bottom and you have a multi-day up move. And then the final one, which I mentioned at the top, was Twitter, TWTR. And this one, it actually sold off the prior 2 days really hard. It come off about 14%, including the gap down this morning. And although it hadn't sold off, this was the third day, so it had sold off hard day one. You can see a lot on day two, closed at the low and was gapping lower today. Quite often on the third gap down, off of a key level, whole number divisible by 10, $30, you'll get a decent bounce, even if it's not the bottom. I actually did a this is the 5 minute. You can see the bounce there, but I actually drilled down into a 1 minute chart to kind of show you exactly how I looked at this on the open, so I give you a little bit more feel. So right on the open, it flushed into $30. I already had a bid in there, I think 30.04, 30.05, something like that. I had another bid in front of 29.80. So quite often what you'll see is it's gapping down, goes to the whole number, they'll flush it through, it'll go down to 90 or 80 cents, and then it'll get back above the whole number, and then you'll get your reversal. So what I like to do is kind of space out the bids in front of 30, sometimes in front of 90 cents, in front of 80 cents. In this case, I was a little bit more conservative. My second bid was in front of 80. It went down there to my bid, but I didn't get executed. And when I noticed it started to move up above 30, I put in a higher bid, and then you can see it came down again, and my higher bid didn't get hit either. So the position I had was the original bid from above $30. The only way you could really add to this position, more to this position, other than the kind of once the bids had stepped in and it showed some strength popping above $30, was to wait for a consolidation. And in this case, I circled that for you. It had a very nice tight consolidation above a quarter, between 50 cents and 30 cents, and then it broke to the upside. So a more conservative trader would actually wait for it to bottom at 30, consolidate sideways like that for a few minutes, and then break to the upside with a stop below that consolidation. And in this case, that was a clean break and ended up bouncing about $1. I think it went up about $1.40, $1.50 from the low. I'm not sure where it is right now as I'm filming the video. But we'll see if 30 ends up being the bottom in this one. But all three of them worked. The market actually bounced as well off of a key level. That probably helped a little bit. And those were the three trades. So for recap, stocks that have sold off hard for a few days in a row, history of strong bounces, stocks that people are familiar with, that they'll jump in on these pullbacks, game plan multiple scenarios. These traded pretty similar. There were a little bit of slight nuances, but not big differences in any of the three. As I mentioned, when I showed you the shot of the second day in technical plays, there were 4 stocks there. We only covered 2 of them. The other 2, which was the number one idea, AWRW, I think was the ticker. We do a 2-hour free workshop. If you click on the link below the video, I teach that second day play in depth, how to find it, how to trade it. And I believe there are 2 other setups taught there by my partner, Mike Bellafiore, in that video, as well as just general stock selection, how to find the best stocks in play. So if you thought this was helpful and useful, you want much more in-depth material, check out the 2-hour workshop, and hope you learned something.